Hello and a very warm welcome to this important discussion, brought to you by the experts over at Pro Tax Accountant. So, have you or someone you know received one of those surprise letters from HMRC about your savings? Well, if you have, trust me, you are not alone. Today, we're going to break down exactly what these warnings mean, and more importantly, what you can actually do about them.
So let's just dive right into the big question, the one that's probably on your mind. Could your savings account really land you with an unexpected tax bill this year? You know, with those brown envelopes landing on doormats all over the country, it's a question keeping a lot of savers up at night. And honestly, for a lot of us, the answer is yeah, it could. But hey, don't panic. We're here to guide you through this and show you how to keep your hard-earned cash safe.
So here's our game plan for today. First, we'll tackle the warning itself. Then, we'll get into the nitty-gritty of your tax-free allowance. After that, we'll look at some really smart ways to save. And finally, we'll cover how to stay on HMRC's good side. We're covering it all.
Okay, let's get into our first section. So what is all this fuss about? Why are these HMRC warnings suddenly popping up everywhere? Let's figure out why so many people are feeling the pressure right now.
Okay, so in a nutshell, this warning is basically a little heads up from the tax office. They're often called nudge letters. And all it means is that based on the information your bank has sent them, it looks like you might have earned more interest than your tax-free allowance covers. It's not an accusation, but it's a very clear signal that you need to double-check your numbers.
So, why now? Why is this all happening? Well, it all boils down to interest rates. A few years back, in 2020, you were lucky to get even 1% on your savings. So a £20,000 savings pot, that would only maybe 200 quid in interest. But fast forward to today, with rates hitting 5% or even more, that same 20 grand is now generating £1,000 in interest. Which is great, right? But it's also pushing a whole lot of people over their tax-free limit for the very first time.
But that's not all, and here's where most people go wrong. It's not just about how much interest you're earning, it's about a specific number, an allowance that's different for pretty much everyone. Understanding your personal number is the absolute key to all of this.
And that magic number? It's called the Personal Savings Allowance, or PSA for short. It's been around since 2016, and it's simply the amount of interest you can earn each tax year before you have to start paying tax on it. Think of it as your own personal tax-free bubble for your savings interest.
Now, this is absolutely crucial to get your head around. Your allowance isn't the same for everybody. It changes based on how much you earn. So, for the 2025 to 26 tax year, if you're a basic rate taxpayer, you get a pretty generous £1,000 allowance. But if you're a higher rate taxpayer, that gets slashed in half to just £500. And get this, if you're an additional rate taxpayer, you get nothing. Zero, a big fat zero. Let's make this real. Meet Sarah, a freelance designer based in London. While she's a basic rate taxpayer, she's happily using her full £1,000 savings allowance. But then she lands a fantastic new client, her income goes up, and whoops, it pushes her into the higher rate tax band. And just like that, her tax-free savings allowance is cut in half, down to £500. And the scary part? She might not even realize it's happened. This is a classic trap.
And hey, did you know this? For those with lower incomes, there's actually another little-known allowance. It's called the starting rate for savings. And if your other income, so not from savings, is low enough, you could get an extra £5,000 of tax-free interest. It's a hugely valuable buffer that so many people just don't know about.
Now, whatever you do, please don't just stick your head in the sand. Ignoring a letter from HMRC is a one-way ticket to some serious financial pain. The penalties, they start at £100, but they snowball, and they snowball fast. We're talking daily penalties, fines based on a percentage of what you owe, and interest on top of all of that. It can spiral into hundreds, even thousands of pounds really quickly.
Okay, enough with the scary stuff. Let's talk about solutions. In this section, we are going to arm you with the tools and the strategies you need to be smart about your savings. And stay with me here. The next point might actually surprise you with how much you could save.
Think of this as your own tax-free toolkit. You've got some seriously powerful options at your disposal. The big one for most people is the individual savings account, or ISA. Then you've got things like NSI premium bonds, where any prizes are tax-free. You can also look at boosting your pension contributions, and for couples, joint accounts can be a real game changer.
So what's the big deal with ISAs? Well, here it is. Any money inside an ISA is completely sheltered from tax. It's like it's in its own little tax-free bubble.
Every single penny of interest you earn inside your ISA does not count towards your personal savings allowance. That makes it the #1 go-to strategy for anyone with a decent chunk of savings.
Okay, here's a fantastic pro tip, especially for couples. Using a joint savings account can be incredibly smart. You see, HMRC automatically assumes the interest is split 50-50 between you. This means both of you can use your own individual personal savings allowance against that interest. So for a couple who are both basic rate taxpayers, that can mean a combined £2,000 of tax-free interest every year.
So, when you put it all together, the smart move is not to put all your eggs in one basket. Don't just chase the highest interest rate and dump all your cash in one place. A balanced portfolio is key. You fill up your ISA first, maybe pop some into premium bonds for a tax-free flutter, and then use your standard savings account for any amount that you know will fit inside your allowance. It's about using all the tools in your toolkit.
All right, let's bring it all home. In our final section, we're going to give you a clear plan for what to do if you get that letter. And just as important, how to make sure you don't get one next year.
So if that letter does show up, here's your 4-step plan. First, breathe. Stay calm, but act quickly. Step 2, log into your personal tax account on the HMRC website. You'll be able to see the interest figures your banks have sent them. Step 3, get your bank statements and compare their numbers with yours. And finally, if you do owe tax, you can usually just pay it online. Or if things are a bit more complicated, you might need to file a self-assessment tax return.
A huge part of staying ahead of the game is not falling for these common myths. Let's bust a few right now. Myth 1. All savings are tax-free. Nope. Myth 2. HMRC doesn't bother with small savers. Wrong. They get data on everyone. And the big one, my one account is under the limit, so I'm fine. It's your total interest from all your accounts added together that counts. Just assuming you're okay because the letter hasn't arrived can be a very expensive mistake.
You know, after taking all of that in, it is completely normal to feel a bit, well, overwhelmed. Everyone's situation is different, and trying to keep track of all these rules and allowances can feel like a full-time job in itself. It's easy to start wondering if you've missed something.
And that's exactly why sometimes the simplest and smartest strategy is to just get an expert to take a look for you. A professional team, like the folks at Pro Tax Accountant, can give you incredible peace of mind. They make sure you are not paying a penny more in tax than you have to, and that you're totally compliant.
So if you'd like some personalized advice about your savings or really any other tax questions you might have, please don't hesitate to reach out to the friendly team at Pro Tax Accountant. You can give them a call or send a WhatsApp message to 07985689912 or just drop them an email at info@protaxaccountant.co.uk.
And finally, to keep yourself armed with clear, simple financial knowledge just like this, make sure you hit that subscribe button on the Pro Tax Accountant YouTube channel. They're always posting helpful discussions to keep you informed and in control of your finances. Thanks so much for joining us today.